Well, good afternoon and happy Friday, everyone. Welcome to Stock Market Today. It's Alyssa Corum and Ed Carson here to break down this week's market action, talk about a couple of individual stocks and your game plan for the week ahead. So in addition to looking at the technical action for the major indexes and key ETFs to just dig a little bit into the market conditions, Ed, we're also going to take a look at three interesting stocks for the week, some which still have some work to do, but what do you have for us?
Good afternoon, Allie. We have Facebook, Element Solutions, and Apple, all which broke out, but they didn't all survive.
All right. Well, we'll get into that. But first, let's take a look at the NASDAQ on Thinkorswim from TD Ameritrade to get those candlesticks and our regression channel lines. So the NASDAQ finished Friday down 0.9%. And so this week, we started off a lot stronger, Ed, than we finished it. We had the S&P 500 down 0.7% on Friday. The Dow down 0.5%. The Russell also getting hit Friday. So what do you make of this week's market action, which was a big week for a lot of earnings reports?
Yeah, and we're going to take a look at two of them, but we had the six largest companies in the S&P 500 report this week. A lot of other big moves, and so there's a lot of things going on that way. We started strong on, and we'll look at some of the ETFs because some of the bigger earnings like Apple and Facebook and stuff, they actually moved the market. And you can see we hit a new high on Thursday morning, but then that immediately turned around and faded. So we started the week strong and we sort of generally drifted lower. But as we'll look on a weekly chart, we ended up sort of flat, a little bit down, not a big deal. We're hitting resistance maybe at this half regression line. That's not the worst thing. We're doing all right. So it wasn't necessarily a great time to be buying stocks, but if you were sort of sticking around in stocks, you're probably not too much different from where you were at the beginning of the week.
Yeah, I agree that Thursday was notably disappointing, but the silver lining, I think, we're still in this uptrend. We're still above the 21-day line, and hey, moving sideways. I will take that over getting extended really fast, really quickly. So maybe a bit of a pause here is okay in the grand scheme of things. But let's take a look at this action on the weekly chart for the NASDAQ, Ed, which closed down about 0.4% for the week, but reversing lower.
Yeah, so we've fallen for a second straight week. I mean, this was got the blue bar because it sort of finished strong, whereas this week we finished weak, but really just two small declines, really, ultimately. I mean, if you just saw the weekly closes, you'd think nothing really had happened the past 2 weeks. I mean, things had happened the last 2 weeks, but it just didn't feel that way. So yeah, I mean, it's like this kind of sideways action is nice. You can sort of see a lot of bases forming and handles forming this kind of action. We'll get to the S&P and some others, which we're getting close to extended. So look, it's always nice to see the stocks go up. It's always nice to see stocks finish the week on a high note. But, stepping back, I think things look pretty normal.
Yeah, a lot of handles forming, but also a lot of breakouts that fizzled by the end of the week. So we'll talk about that a little bit. So still hanging out in this regression channel. But now let's take a look at the S&P 500 on MarketSmith, and just to give us a look at how that index closed out the week, roughly flat, hit a new high earlier in the week, but closed about flat.
Yeah, and this looks a little better because it didn't really fade off. I mean, Thursday it finished very strong. And so here we are. It ended up, we're still close to over 4% above the 50-day line. So just moving sideways. If we had kept going up, we would have been getting extended like you were talking about, and that would have raised the risk of a larger pullback. I mean, dropping down 0.6%, that's fine. We can handle those kind of daily moves. It's moves like this that we don't want to see. We don't want to see this again. We will see this again, but we don't want to see it anytime soon.
Exactly. And we also want to check in on small caps, which we have seen a number of standouts coming from the small cap area, but by and large, getting hit today, down about 1.3%. IWM, that is, which tracks the Russell 2000. So we're still holding above that 50-day line, which the Russell was able to retake recently. So that seems like the level that we really want to see the Russell holding.
Yeah, I mean, right now this could just be a little shakeout. Maybe you see handles form on a lot of stocks. But yeah, this was more discouraging, but it just depends on what happens next. If we stabilize here above or find support at the 50-day line and then move higher again, then this is great. If this is the beginning of a drop through the 50-day line, then we'd be more concerned.
But maybe it's the beginning of more handles. So it's just can we handle the handles? But now give us a look at some of the ETFs, Ed, that you've been looking at throughout the week, just to give us a little bit more of a sense of what's going on underneath the surface.
And I think one of the reasons why I'm going to take a look at the IBD 50 Innovator IBD 50 Fund FFTY, and one reason is because the major indexes, there were some big moves on some of those mega caps. But if you actually look at some of the major ETFs, it started really strong. So if you were buying at the beginning of this week, having this strong move, it just pulled back. And that's normal reaction. As you can see, we went up this way, not that much. We gave up some, but it's just that it just didn't feel as fun if you were buying here or buying here. And all of a sudden, then you reverse and you're down 2, 3, 4%, or sometimes more. I'm just going to go through some of these others. SMH.
Yeah, chips. Didn't have a great week.
Did not have a great week. No, there's definitely a lot of things. IGV, not a great week. Again, maybe it's forming a handle, but it just
so wasn't that's the software area.
I'm sorry, you're right. I'm so used to it. I don't say it, but like Microsoft and ServiceNow,
right.
A lot of things in there. XME, this is the mining and metals ETF. Again, just pulling back late in the week. Nothing unusual, but if you bought early in the week, not so much fun. And then ARC Innovation, this owns Tesla, this owns a lot of the more highly valued names. This one just sort of ran into trouble this week, but that's just what we've been seeing. You bought on a Monday, you're struggling on a Friday in that regard, but the pattern doesn't change that dramatically either.
All right. Well, with all of that in mind, now let's take a look at a couple of stocks. So let's start off with Facebook, which had a strong positive reaction to its quarterly report. With a big move coming on Thursday, and it did fall about 1.3% on Friday, but it was an inside day, and Facebook gained about 8% for the week here, Ed, in some heavy volume.
Yeah, I mean, really nice action. You could have said that the handle buy point was probably here. You could have used this as a buy point. So heading into earnings, it was already in buy zone, however you look at it. So it gapped higher. You can either treat that as an earnings gap, or you could treat it as sort of like above this area, sort of like a high handle type or shelf, and use that. So however you look at it, it was actionable after this day. Strong volume. The earnings growth is accelerating, the revenue is accelerating. So it was pretty powerful move, and the growth is over strong numbers a year ago. I mean, we were growing last year. This isn't like, oh, it was barely surviving a year ago and is recovering. This was like, it's just building momentum after a strong 2020.
So now from here, with these earnings gaps, we want to see this stock hold the gain. If it fills the gap, that's not going to be a good sign.
Yeah, and that sometimes happens, and so you have to be ready to do it. The nice thing about earnings gap is that there's a powerful, it suggests there's real power, that maybe the market hasn't really valued a company well enough. And so you can often get some really big gains, but you have to be ready that there is a risk, is that they can pull back a fair amount. And so you have to be ready to cut losses as well.
And if Facebook were to fill the gap, what would that say anything about the health of the overall market, do you think?
Well, I mean, it might be well, I guess it would sort of depend on the rest of the market. If the market's chugging along and Facebook is reversing lower, and that would be surprising if Facebook were to reverse lower now, absent like the government saying we're filing an antitrust suit, because we just had earnings out. So it'd be surprising to fill the gap if the market weren't in trouble. So that would probably be related to the market.
All right. Well, hopefully Facebook can hold the low of that breakout day. That would definitely be the goal right here. And we also want to take a look at Element Solutions, ticker ESI, breaking out this week on its quarterly report out of that cut base there, and continued to add to its gains today, adding on another 2% on Friday. So 2 days of heavy volume here for Element Solutions, gaining 7% for the week.
Yeah, in a week where we had some reversals and some other things, there's a lot of nice elements here. You talked about the volume, solid gains, earnings and sales growth accelerating. This one has a relative strength line that's just below highs, so it's basically, it has a lot of breakouts because the market's been moving up. So anything consolidating, it's hard to get the RS line up there, but this had a shallow base. The prior breakout didn't work, but that doesn't mean the next one can't. It didn't break down. And so it's set up again, and here it goes. This is, this is the kind of thing that you need to just keep some of these things on your watch list, not let it be discouraged, and consider it when they come back up.
Right. I think an issue that's been tricky lately is with these breakouts, we have seen pullbacks after the breakouts. So how should investors be thinking about buying breakouts when it's been tricky lately?
It has been tricky. It has been very tricky. And this one has worked out. To be honest, you could have, it might not have. I mean, it's like there wasn't any golden reason why this one had to work. So, it's been a tricky environment in that regard. They know the market faded off this week. Well, it's going to be hard for breakouts to work in that environment. So if you do buy breakouts, try to buy them very early. You can think about trying to do early buy points, like as they rebound through trend lines or up through the 50-day line in certain situations, to try to start a position at least, so you aren't too exposed for a pullback. But yeah, definitely, trying to get the low price points and early entries are a good way to go.
That's exactly right. I mean, with the traditional breakout from a cut base like this, we do have that 5% buy zone. But as you said, Ed, the more advanced investors are going to want to try to get in there as close to that buy point as possible, instead of, waiting for that, 3, 4, 5% above the buy zone, because that's just that much more extended it is, that could make you vulnerable to a pullback.
Exactly.
All right. And speaking of breakouts that fizzled, we want to check in on Apple, which actually reversed lower on Thursday, continued lower on Friday. It's now right around its 21-day moving average. But as you were talking about on IBD Live, Ed, the handle that Apple had been forming up until this attempted breakout wasn't really much of a shakeout in there.
No, there wasn't. I mean, you could barely see the handle. If that wasn't marked, you might not even know it's there. And, it's hard to imagine really being shaken out by this. I mean, the whole point of a handle is you'd like to see a light volume pullback. You want to get people who aren't really that committed to the stock to get out. And so when the stock does break out, it's got power, and everybody's happy, everybody's committed. So it really can go higher. But this one was so small, wasn't really there. So, I mean, the upside here is that now we're getting a pullback, and, it undercut this level. It's not a handle on a daily chart, but on a weekly chart, there's at least something. It wouldn't be terrible if it kept on falling a little bit further, but at least there's a handle that you can see on a weekly chart.
All right. Well, so that would make Thursday's high potentially the new handle buy point to watch. So we'll have to see if a true handle can develop here for Apple, Ed. But let's talk now about the game plan for the week ahead, because as we've been talking about, we started off the week pretty strong and did not have as much of an exciting week by the end of the week. Thursday, notably disappointing, and continued to see a lot of weak action on Friday. So this may have meant investors buying breakouts at the beginning of the week are now sitting on some losses.
Yeah, a couple of points simply on that is that one is that, you might have, if you already sold some of those things because you needed to, just I'm cutting losses, or they got all the way to the 7-8%. Okay, that's great. That's good to do that. But if you have some others, this week, and you take a look and say, well, do I just have to sell them pretty much right when we get going on Monday, a few minutes into it, or do I have an exit strategy? If it goes to here, I'm getting out. Just so you know what's going on. It's always important. And I think also is that this is just definitely a market where you don't want to just be jumping in, like say you're 25% invested. You don't want to be rushing and say, now I'm going to be fully invested. I'm buying all this stuff today. The market's ups and downs and the sector rotations that we've had here and there, just, it doesn't make, you don't want to be concentrating. Like I'm buying a bunch of steel stocks or a bunch of chips, all in one day. It's just likely not to go well for you, to be honest. It's one that you want to incrementally increase and step back when things aren't working, either as a portfolio plan or just because the stock isn't working.
And although we had a lot of the biggest earnings reports this week, we still have more to go next week. And one area in particular that stands out is the oil and gas. A lot of the oil and gas stocks, a number of them are setting up in basis heading into their earnings report. So as earnings season unfolds, we've been saying make sure to keep your watch list up to date for those stocks that are set to issue their quarterly reports, because even though not every breakaway gap on earnings works, they can be very powerful. So it's a good idea to have the ones that could potentially happen to on your radar ahead of time.
Yeah, I mean, something like Element Solutions, you wanted to be ready ahead of time as opposed to saying, oh, that's looking great now. And like, do I really want to buy, you want to know if you want to buy a stock like that. So you can try to buy it, as close to the breakout as possible in that situation. And there may actually be more earnings next week than this week. It's just that they're not as big. And you've already had several, like Skyworks influenced some of the Apple chip makers. Well, some more of them report, but that might matter for that stock, but probably not as much for the rest, because we already sort of know, as opposed to there's already been these trendsetters out there. So it still matters a lot for your stocks. You definitely want to know what your portfolio is in there. You can see some of the stock reaction to earnings that you need to have a strategy. And I think that it's important when you go through the earnings season, well, decide, if you decide, oh, I want to hold it if it's got this kind of cushion, or I'm going to do this or this. Well, look back. I mean, post to the post-mortem is taking a look and saying, well, was that a right strategy? I mean, that doesn't mean that every strategy is going to be perfect. Of course, it's not. Just trying to find the right strategy so you're generally protected, that you're generally getting most of the gains while minimizing your losses in earnings season. Just see if that's working, because that's something that you need to, you may to adjust and then eventually decide this is, I feel comfortable with this strategy. I've tested it and I think it works.
Right. And one strategy that I think is pretty time tested that we talk about a lot is using that 10-week moving average as your guide. It could be great to size positions off of that level, whether it's a stock carving up the right side of a base or just rebounding off of that level. And it's also a great line in the sand for that final decisive sell signal. If you see a decisive close of 2% or more below that level by the end of the week. So maybe another good thing to do, Ed, to maybe prevent some knee-jerk reactions too, because this is a bit of a bumpy ride. It's a bit of a roller coaster right now. But take a step back and look at those weekly charts, maybe to prevent some panic selling if it's not warranted. Of course, if the selling is warranted, as you were saying earlier, you got to follow the rules. But I find that also, as we all talk about a lot, those weekly charts can be very helpful as well to put things in perspective.
And yeah, if you can't take the time to put a weekly chart up before selling, then you're probably panicking. So, I mean, at the very least, take a look at that weekly chart, like take a few seconds, and then you can make, a decision. But that's a very good point to avoid the panic selling.
I like that. And all right. Well, on that note, thanks for watching this week, everyone. We're going to be back on Monday with more insights for you as earnings season continues. So whether it's on the show, investors.com, or IBD Live at investors.com/IBD Live, we hope you join us. Thanks for watching and have a great weekend.